Hello, my YouTube friends, and happy Thursday. I hope everybody's doing great. Markets are screaming higher as Trump worked the most amazing deal with the UK ever. I mean, when I tell you this is the most incredible deal, you have no idea exactly what it is because they did things behind the scenes that nobody else has ever seen before. The nice thing is, like I said, the markets are screaming higher, which is great to see. We're going to talk about the deal as well as some other things, so stick around. Should be a really good video.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
So, what the heck is going on today and what's going on with the tariffs? We're going to talk about that, but also what is going on with the crazy smock and the ribs. Well, we're cooking ribs today, so I hope it doesn't bother you guys that I'm going to waver back and forth between the markets and cooking, show a couple of tricks that I do here, especially to try to keep things clean because, otherwise I'll get yelled at for not being super clean. Um, Either way, what's so amazing, as much as I joke and say it's the most amazing thing ever, and you won't believe it, you won't even understand what's going on. The reason for that is we really don't know what's going on. There hasn't been any decisions yet about the actual tariffs. There's just been an announcement that an agreement has been come to, whatever that means. And over the next few weeks, we're going to hear what they've decided. Now, the markets seem to love it, so I got no complaint. I'm 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 perfectly happy to watch the markets go higher, so what's the difference to me? But the reality is nothing's really changed. No agreement's been come to. Who knows what they've discussed and if it'll be good. But I think what the market's like is some clarity that some progress is being made. It's just really nice to see how much higher they are. I still kind of wonder about, was that enough panic that we saw that we're just not going to see anymore? I mean, the lows in April were pretty scary and looked like the market really could collapse. We were down 10% in 2 days alone. People were calling who don't typically call me asking, should I sell everything? And to me, that's a really good sign of a good bottom. And now that we're going higher, the movement going higher doesn't really feel like tons of buying. I don't know how to explain it, but it really feels like the sellers are just exhausted, which could mean we have a long way to go. Now, what's tough for me to understand is, does that mean we're just going right back to 25 times next year's earnings and being overvalued? Because I can't have a reason that I can justify that. In my conversation with my brother, it's like I'm trying to come up with a reason we'd go back to that. And the only thing I can come up with is maybe inflation goes through everything, including price to earnings ratios. Now, when I look at what's higher today, I'm a little surprised because it really is pretty much everything. It does make sense to me. I've been banging my hands on the table. I still think things like Target are an unbelievable value. Today it's pushing up against like $98 a share, but it's still super cheap. It only looks like it's moved a bit because of the lows were set in around, $90 and a little below. So it feels like it's gone up a good amount. But I think until it gets above maybe 120, it's still rather cheap, which means there's like 20% upside still from where it is now, still being inexpensive. I feel the same way about Whirlpool. It's up to, I think I saw over $78 a share, but they seem to be making a turnaround. They've made a comment that the tariffs don't impact them that much or as much as they thought. Earnings are going positive and growing. And if you buy it currently, you're getting a 9% dividend on something that should be able to increase their profits enough to be able to make the payments on the dividend. Now, as I stated in another video, you are taking a bit of risk because the last quarterly report, they made $1.25 for the quarter and they're paying out 175 for their dividend. So that can't go on forever. I mean, they can't be making 50 cents less than what the dividend is. But they also made reference that not only are the tariffs not hurting them as much, they expect that to go up over time. So I'm imagining that they're allowing the dividend to be larger than the income coming in because they see potential that it's going to increase and they'll have no problem paying that dividend. And if I can get a stock paying 8 or 9% return just on a dividend payment, and my hope is then I get some appreciation as well, to me, that's another great opportunity. And then Target's paying close to 5% dividend on a company with an 11 PE, actually lower than 11, which is a total steal because they're still growing. They were just in the news for needing to close stores because of theft, which I think is a good thing. If you have non-performing stores and you're able to close them down because of things going on in the media that give you an excuse to get out of leases and get out of bad investments and stick with just the good ones, why wouldn't you get out of the ones that are losing money and stick with the ones that are making money? They then got in problems because they had gone woke. Well, okay, who cares how a company goes? But meanwhile, you had some people yelling and screaming saying they're not going to shop there anymore. They saw that it was causing problems, so they decided to stop going woke. And now they upset the people who were woke because they're no longer going that direction. You had people yelling and screaming. You had them on the internet saying, I'm never going to Target again. But the reality is, with all those people saying they were never going to Target again, the earnings were still just fine. And they're still projected to grow. So, how bad is it really? And then they had a little bit off of an earnings, but not so bad. They were still decent. Same thing, same thing. Good company, bad press. I think all that stuff wanes over time. I don't think people really boycott forever. Look at Chipotle when they had their problems years ago. And man, look at Boeing that's up over $190 a share that I was telling you guys about before when they had the planes crash and the CEO using the planes to fly personal things on, and then people who were passing away who were testifying against them, and I mean, there were so many comments in the comment section about Boeing's going out of business, they're going to be this, they're going to be that. The news is just the news and the background noise, and what you try to wait for is bad news on good companies. I mean, to me, that's where Nike is also. I mean, I think under $60 a share, with all this, on cloud's going to put them out of business, and Adidas and everybody else, generally in the long run, things tend to work themselves out, and companies that are good tend to stay good over a long time. Anyway, what I'm doing now is I'm taking off. There's a layer on the back of the ribs that's kind of, I don't know if you've ever had ribs and you get that, it's hard to bite it because it's kind of hard. There's just this one layer. Normally, like, I'd like to put on gloves, but I hate to admit they're a pain in the butt to actually get that piece off. So it's way easier with your hands. You just have to make sure to wash them afterwards. That's the first step, is taking these out. I got my garbage back here so I can just throw this stuff out. I put on the table, I think you saw some plastic wrap, so like, you still have to wash it afterwards, but it helps to keep it from getting really bad with all the juice and everything else. So either way, like, I think that stuff makes sense to be going up. What's interesting to me is watching the Amazons are more on point to something like Costco. That's so hard for me because trading like 50 times next year's earnings. I guess it's because it's so secure and it goes, it's always doing better and better, and they have room to expand and whatever else. But it's still hard for me at this valuation on a company like Costco that I think is a great company. The thing is, we're still going to have to come to some resolution with China. The tariffs are still way too high. In fact, Trump even admitted on, I think it was on Dateline, but I'd have to look it up again and double check, where even he said it's too high. And of course, he expects them to come down. Now, in the meantime, we're at a bit of an impasse because China says they won't come to the table unless we lower the tariffs. And Trump and our administration is saying we're not lowering our tariffs until we can come to some sort of agreement of what it's going to look like. There's no right or wrong here. The concern is still that maybe it goes too far. What I'm doing here is I'm still taking off the extra juices and stuff to try to dry this down and pat it out a bit. And then I made a rub. It's just salt, pepper, garlic powder, and some paprika and a little bit of sugar that we'll put on top of these two and let them sit for about an hour. But somewhere it's going to have to break. I mean, even Trump made a comment that if things don't change, that just means that there's no trade going on. And nobody really wants no trade going on. Like neither China or the US. That does nobody any good to have like just stagnant, no business. But what I think we're seeing right now is the companies bought everything in advance. They knew the tariffs were coming along. So if you're Target or you're Ford or you're whoever, and you know that you buy things from these countries that we're having issues with, well, you buy as much as you can and you put it in your warehouses and you wait it through. The funny thing is, and I think I mentioned this in another video too. So, one of my friend's old employees went to buy a car about 3 weeks, maybe 4 weeks ago. When he went to buy it, on the sticker was a $5,000 charge for a tariff fee. The funny thing about that is the tariffs hadn't gone into effect on automobiles yet. So I think what you're actually seeing is an ability for companies to continue to raise prices and not really get blamed the same way because everybody's going to blame the tariffs. I think it allows them to take a chance and see if things hold with higher prices. I mean, with all the news and all the media going on, if I'm Target or I'm Whirlpool or I'm anybody who sells retail products, why wouldn't I raise the prices right now? Everybody's going to hem and haw. They're going to watch the news and they're going to think, these damn tariffs. And the thing is, it gives me an opportunity to see if those prices hold. Or am I in trouble and I need to lower them and discount it and I'll put something on sale if I have to. But in the meantime, I haven't paid the tariffs yet. I haven't been charged anything. All I've done is, in preparation, raised my prices. And if those prices hold, well, better margins. In the meantime, it also gives me an opportunity, if I want to let people go, which is terrible. I'm not saying that's a good thing. I'm just explaining it. Like, all of a sudden, I can fire people and I can blame tariffs and say that AI is helping me. We're going to focus more on making things more automated because the technology is getting better. So here you are in a position where you can raise prices to get better margins. You can also slim down on your staff and increase your margins and make more profits. Maybe revenue drops, but I think these companies are going to have good profits, which could in turn mean better stock prices, and maybe that's why the market's rallying. It could also just be simple supply and demand, and we had enough fear in the market. Again, it's still really nice to see. I'm watching Amazon push back up to, I think it was 192 when I started talking again now. But I'd love to see it get above that 195 area that was the recent high. I know the high is like 240 something, but when it popped up the last time and before falling back down, got around 195. So that's in my mind the top of the recent raid. And then, I'll tell you, I know I talked about, if you didn't see yesterday's video and you want to check it out, cash secured puts and covered calls. I'll tell you one of the negatives because it's what happened on a couple of things. So the news on Google, which we'll talk about a little as well in terms of their search and why the stock fell off so hard. Um, I think there's good reason for the stock falling off, but I also think at this price, it's a little bit, it's becoming reasonable even if search deteriorates over the next 5 years. Anyway, that being said, gave an opportunity that I actually sold some cash secured puts in Google because my attitude was, well, it's fallen far enough. Even if search deteriorates, maybe I'd pick some up at 148 and 145 over the next couple weeks if it continued to fall. Here's the negative. I didn't buy the stock, and the stock is up a good bit today. Maybe I collected $1 for the put that I sold, and I make $100 if it doesn't go below those levels. But that's what I'm limited to. And when you watch the guys on CNBC, and I won't say their names, but there's a couple of brothers who talk about options. What they do is they waver between percent and dollar gains. And what they'll do in that scenario, they'll talk about the secured put that they sold and how they made 100% on the trade. But when you do options, you're not making the same size investment you are as when you're buying a stock. So to switch to a percentage and say I made 80% or 100% is a little deceiving because how many calls or how many puts did you really sell? and you're not investing the same way you might put in $10,000 into Target or Amazon or whatever. You're doing one option or two options. So it's still only maybe $100 or $200. To flip it to percentages, if it was some massive trade, is kind of silly. And then the opposite happens when they talk about, if I invested in Amazon and it went against me, I would have lost $2,000. I'm obviously making it up. But if I did the call, I would have only lost $100. It's the same thing. It's because the bet is actually smaller, not because it always works out this way. The negative with selling cash secured puts is twofold. One, potentially it doesn't get to your price and you didn't buy the stock, you just collected on the option, which I think is still worth doing. Or two, there could be a scenario where you sell the put, the stock actually goes below that level. So if you had just put a bid offer in, you would have been filled, and then shoots back up so that you never actually get assigned the stock by selling the put. Now, again, these are all different strategies. I like selling options. I'm really happy with the trade and it worked out great. But it just points out one of the negatives with options and selling, whether it's cash secured puts or covered calls. Both are things that can happen that are negative against it. So now in terms of cooking, for those of you who are curious about the ribs, I tend to keep my temperature pretty low, somewhere between 180 degrees to maybe 210 degrees at the most. I give it a good 4 or 5 hours as is, right on the racks in the smoker. I use a combination of apple and cherry and hickory wood. And I like to use wood more than the pellets, but I will tell you the pellets are easier. After the 4 or 5 hours, the reason for this, I do a little bit of a cheat. I know in a competition they're not okay with it. I will wrap it up with the tin foil, and I might even use a little of this if I'm worried that the liquid will drip, because I'm about to say, and I tend to add like apple cider, I find is the best. But if I'm in a jam, I'll buy like some, they've got these simply whatever flavored drinks, and I'll go with like mango, or I might get a little bit of Sprite or something like that. And I'll bring the ribs out, I will put them in tin foil, I'll wrap them with the liquid, and I'll give them another 2 to 3 hours for a total cook time of about 7 hours. I know a lot of people do it less, but this ends up giving a real fall off the bone type of thing, which is what my wife really likes. I like a little bit more of a bite. Um, but to be fair, they really do come out great. I then do a combination. Give me a minute. I'll go off the screen for a second, probably. Of, all right. So my in-laws bought this for us, which was cool, and tried it out. The Sam's hot and spicy barbecue sauce, and then, like everybody, the Sweet Baby Ray's. So I'll mix those together so it has a little bit of spicy to it. I'll put that on top, and I'll finish it off on the grill. I might even put it in the smoker for the last half hour to let it cook into it, but then I'll finish it on the grill to give it that caramelized taste. The reason I tell you all that is by the time I get the video posted, that'll already be done, and I'm not going to be showing you me wrapping it and putting it in the smoker and stuff. I will tell you, for those of you who like to cook, a smoker for things like ribs or brisket is friggin' awesome. It blows away a traditional barbecue or the oven. The flavor's unbelievable. It's really easy. You kind of just set it and forget it, like Ron Pope said. You just make sure the temperature stays. And in some ways, the less you bother with it, the better. Kind of like stock trading. You just kind of set it and forget it, and those do just well as long as you buy really good companies. As always, this is not financial advice. Please don't listen to me or anybody on YouTube for that matter. You guys need to do your own research and potentially reach out to a financial advisor for any financial decisions you make. I'm just sharing what works for me, and I hope you take it as entertainment purposes only. I still love Target. I took a little glance. It was above 98 for a bit, which is pretty cool to see it going on 100. Um, and I don't know how many of you took a look at Boeing that I was screaming about before. And don't get me wrong, I took a lot of heat on Boeing. I started buying it at like 170 a share, maybe even a little bit higher. All the way down, it fell below 140. It got into the 130s, and I was still buying some, but I was pretty nervous that, geez, maybe this thing really is having trouble. Now it's back up above 190. Super cool to see. I think it's the same thing with some of those others, that great companies out of favor. Do me a favor if you haven't already, hit that subscribe button, smash the like button, make some comments in the comment section. Let me know what you think about Trump's policy with these tariffs. How do you think things are going to play out? Do you think we already saw the bottom? I mean, I did some videos a while back that I expect to be making new highs by the end of the year. And amazingly, it kind of feels that way. Doesn't make sense to me, kind of like what I talked about with the housing market. I'm not saying that will happen, but it sure kind of feels that way because I don't see a lot of people saying, I'm going to buy, I'm going to buy. And when the market's going straight up and nobody's paying attention is generally when it continues. Anyway, have a great day. I'm going to get this stuff edited. I'm going to get this into the smoker, go for a walk while it's cooking. Like I said, set it and forget it. Check the temperature when I get back, and then do my round of wrapping and stuff. Have a great rest of your day, and hopefully have time to do another video tomorrow.